And so, I think it's a little bit longer game. We're taking all the steps to do it right to make sure we're positioned to have a full portfolio of vehicles and win. And we have said that, by mid-decade, we will be selling more EVs in this country than anyone else.
Chevrolet drops a bombshell, leaving the entire market stunned. For years, automakers have promised innovation, efficiency, and affordability, yet those promises often fall short. Buyers end up paying more while getting less. This time, it's different. Chevrolet isn't just adjusting the old playbook or following the crowd. Instead, they've turned everything upside down, reshaping expectations and forcing competitors to reconsider their strategies. But what allowed a traditional brand to leap ahead of luxury-focused rivals? Why are dealerships pivoting so dramatically in response? Most importantly, how will these changes directly impact you as a car buyer? Let's take a closer look and talk about how you can benefit from this. The bombshell in a chaotic market. The car market was already in chaos. Overflowing inventories, layoffs, and intense competition were hitting manufacturers hard. In the middle of this, Chevrolet made a bold move that set them apart from the rest. What made their announcement so shocking wasn't just the timing, but the confidence behind it. While other automakers were cutting back and offering discounts to survive, Chevrolet took the chance to rewrite the rules. They didn't just keep up, they stunned Wall Street and the entire industry with a game-changing strategy. In fact, Chevrolet's earnings soared well beyond expectations, delivering a 20% increase over the previous quarter. That kind of growth wasn't just rare in a struggling market. It proved that their approach wasn't just bold, it was effective. But what exactly did Chevrolet do, and how did they succeed when others were struggling? Inside Chevy's winning playbook. Chevrolet's success didn't come from chance. It came from a carefully balanced strategy that focused on affordability, quality, and adaptability. While some competitors bet heavily on high-margin luxury vehicles and aggressive electrification, Chevrolet took a more measured approach. They maintained a diverse lineup that appealed to a wide range of consumers, ensuring that even their entry-level models provided solid value without sacrificing quality. At the same time, they kept premium options like the Silverado and Tahoe available for those willing to spend more. This balance between affordability and premium quality allowed Chevrolet to remain accessible to mass-market buyers while still delivering vehicles that felt aspirational. But what really set them apart was their ability to pivot quickly. When interest rates rose and household budgets tightened, Chevrolet recognized that consumers needed practical, cost-effective options. Instead of doubling down on expensive models that fewer buyers could afford, they focused on providing reliable vehicles that met real-world needs. Chevrolet also maintained strong relationships with their dealers, ensuring that inventory moved smoothly and customers had access to vehicles they actually wanted. This collaborative approach meant that their cars didn't sit idle on lots, giving Chevrolet an edge over competitors who struggled with unsold stock. Together, these factors created a winning formula, one that allowed Chevrolet to outperform the competition at every turn. Where competitors stumbled, the same market conditions that tested Chevrolet also exposed significant flaws in their competitors' strategies. Manufacturers like Ford and Stellantis were caught off guard by the rapid changes in consumer preferences. Both companies invested heavily in high-margin luxury vehicles and electric models, assuming that demand would continue to grow unabated. However, when economic conditions shifted, these bets backfired. Inventories ballooned as these expensive vehicles failed to find buyers, and production cuts became unavoidable. Stellantis, for example, had to curtail production of key models like the Ram 1500 Classic because their inventory levels were unsustainable. Ford, meanwhile, faced dealership lots overflowing with unsold vehicles, leaving their sales network under tremendous strain. In both cases, the companies struggled to adapt quickly enough to the changing market. Instead of addressing consumer demand for affordable and practical options, they remained focused on premium models that fewer people could afford. Chevrolet, on the other hand, saw the writing on the wall. They knew that the rising cost of living and climbing interest rates were pushing buyers toward more accessible options. By maintaining a portfolio that included affordable vehicles without compromising quality, Chevrolet managed to keep their lineup relevant and in demand. While Ford and Stellantis scrambled to adjust, Chevrolet had already positioned itself as the go-to choice for consumers looking for value. Ripple effects on the industry. Chevrolet's approach didn't just benefit them, it sent ripples through the entire car market. As competitors began to take notice of Chevrolet's success, they were forced to reconsider their own strategies. Suddenly, producing affordable, well-balanced vehicles wasn't just a niche approach, it was becoming the new industry standard. Other automakers started re-evaluating their production schedules, pricing strategies, and even their long-term investments. Brands that had previously focused exclusively on high-end models began looking for ways to introduce more accessible options. Dealership networks that had struggled with bloated inventories started exploring more collaborative approaches to align supply with actual demand. In short, Chevrolet's success reshaped industry norms and forced others to follow suit. Chevrolet's influence extended beyond pricing and production. Their success also changed the way automakers thought about electrification. While many companies rushed headlong into electric vehicle development, Chevrolet adopted a more cautious approach. They continued to produce popular gas-powered models while gradually expanding their electric lineup. This allowed them to maintain profitability and serve a broad customer base. As other brands adjusted their EV strategies to better match consumer readiness, Chevrolet's balanced approach stood as a model for the industry. Chevrolet's ability to thrive while others struggled came down to a few critical factors: recognizing the market's shifting needs, maintaining strong partnerships with dealers, and focusing on a balanced lineup that catered to all segments of the consumer base. This formula helped them navigate a turbulent market with confidence and poise. By listening to what their customers truly wanted, vehicles that combined reliability, quality, and affordability, Chevrolet redefined what it means to succeed in the automotive industry. Instead of chasing short-term profits through overpriced luxury models or risky overhauls, they stayed the course, making incremental adjustments that aligned with consumer expectations. The result was not just a better position in the market, it was a total shift in how the automotive world viewed value. Chevrolet demonstrated that a company doesn't have to overextend itself to compete. Instead, by understanding the challenges buyers face and crafting solutions that address those concerns, a brand can build trust and loyalty while staying profitable. This is not just a momentary victory for Chevrolet, it's a blueprint for sustainable success. Their actions forced rivals to adapt, ensuring that the benefits of this new approach would ripple throughout the industry. More consumers could now afford quality vehicles, dealers could maintain healthier inventory levels, and competitors had to reconsider their strategies, driving innovation and competition that ultimately benefited everyone. By showing how a steady, consumer-focused approach can deliver results, Chevrolet turned a turbulent period into an opportunity for growth and leadership. Their bold move didn't just preserve their place in the market, it elevated them to a position of influence that continues to shape the automotive landscape today. Sustainability and profitability. What's driving Chevy's success in the age of electrification? Unlike many competitors who have rushed headlong into electric vehicle production, Chevy has chosen a measured approach that ensures long-term profitability without sacrificing stability. By maintaining a balance between traditional gas-powered models and a thoughtful rollout of electric offerings, Chevy is navigating a complex transition more effectively than most. Consider the Chevy Silverado and the Equinox. Instead of abandoning popular gas-powered versions, Chevy has optimized these models to remain competitive, retaining their strong appeal in a market still adjusting to electrification. The company's strategy has not only kept existing customers loyal, but also attracted new buyers who appreciate the practicality and reliability of established models. By carefully pacing the introduction of electric variants, Chevy can refine its production processes, improve battery technology, and manage costs, ensuring that when they do scale up electric production, it will be both efficient and profitable. This approach stands in stark contrast to rivals that have plunged into the electric market, often at the expense of their core lineup. While competitors grapple with the high costs and logistical hurdles of electric vehicle production, Chevy is thriving. Their strategy has allowed them to sidestep the pitfalls of overinvestment in unproven technologies while still signaling a commitment to innovation. This balance ensures that Chevy is not only prepared for the future, but also protected against the uncertainty that continues to surround the electric vehicle market. It's a plan that positions them to lead the way while maintaining the financial strength to navigate a rapidly changing industry. Chevy's dealer advantage. How did Chevy's dealer network help them stay ahead of the curve? A significant part of Chevy's success comes from its close partnership with dealers, a factor often overlooked in today's discussions about automotive strategy. Unlike some competitors, Chevy has maintained strong relationships with its dealerships, fostering a network that ensures efficient inventory turnover, consistent sales, and a better overall experience for consumers. While others have faced pushback from dealers, often due to unsellable stock or overly aggressive allocation policies, Chevy has taken a more collaborative approach. They align production with actual market demand, allowing dealers to move inventory swiftly without resorting to deep discounts or costly incentives. This creates a healthier supply chain and boosts dealer confidence, as they know they'll have vehicles that customers actually want. Furthermore, this strong dealer relationship translates directly into customer satisfaction. When dealers feel supported, they can focus on providing better service, improving the purchasing experience, and ensuring that buyers leave with a vehicle they truly value. Chevy's ability to maintain this harmony between the manufacturer and the dealership network is a significant advantage. It's a model of cooperation that helps everyone involved, from the factory floor to the showroom. The electric vehicle gamble. While others dove headfirst into electric vehicles, Chevy cautiously dipped its toes in. The result? A more stable and adaptable position in a rapidly evolving market. Chevy's approach to electrification reflects a deep understanding of current consumer behavior, as well as a keen awareness of the financial realities of electric vehicle production. Competitors like Ford and Stellantis, for instance, have faced challenges meeting initial expectations for their electric vehicles. Models such as the Ford F-150 Lightning have yet to deliver the level of success that was initially projected, largely due to high production costs and slower than expected adoption rates. Chevy, however, has taken a more measured path by introducing electric models gradually, while still maintaining a robust lineup of profitable gas-powered vehicles. Chevy has positioned itself to adapt as the market evolves. This measured approach allows them to learn from the missteps of others, ensuring that when they fully scale their electric lineup, it will be with a more refined process and a clearer understanding of consumer demand. This strategy also mitigates the risks associated with overproduction. By focusing on both gas-powered and electric models, Chevy can maintain a steady revenue stream while exploring new technologies. It's a methodical path that has allowed them to remain flexible, adapt to market changes, and avoid the financial strain that often accompanies rushed transitions. In the end, Chevy's careful planning ensures that their customers will benefit from reliable options, whether they're ready to embrace electric vehicles now or prefer the proven dependability of traditional powertrains. Why affordability matters more than ever. Chevy's focus on affordability is setting a new precedent for the automotive industry. In today's challenging economic climate, marked by rising living costs, higher interest rates, and increasing financial uncertainty, many consumers are looking for vehicles that offer genuine value without breaking the bank. This is where Chevy's strategy truly shines. Take the Chevy Trailblazer and the Trax, for example. These models are designed with everyday buyers in mind, offering a combination of quality, reliability, and affordability that stands out in an increasingly expensive market. By prioritizing cost-effective options, Chevy has positioned itself as a brand that understands the needs of modern consumers. This emphasis on practical pricing means more people can access reliable transportation, even as economic pressures mount. The importance of this approach cannot be overstated. While other automakers have doubled down on luxury models and high-margin vehicles, Chevy has consistently offered a more balanced lineup. This strategy not only makes their cars more attainable, but also builds trust with their customer base. People know they can turn to Chevy for vehicles that fit their budget without sacrificing essential features or quality. In doing so, Chevy is helping to reshape the market and redefine what it means to provide true value in the automotive world. Chevy's customer-centric focus. In a market dominated by luxury models and electric promises, Chevy stayed grounded. While competitors were busy chasing niche luxury buyers or diving headfirst into costly electrification projects, Chevy made an intentional decision to focus on the everyday consumer. They recognized that many car buyers weren't looking for the latest luxury badge or a futuristic electric vehicle at an astronomical price point. Instead, they wanted vehicles that were practical, reliable, and affordable. By staying true to this consumer-first approach, Chevy managed to resonate with a broad audience, bridging the gap between high-quality performance and financial accessibility. The result? Chevy not only strengthened its reputation, but also built a loyal customer base that continues to choose the brand year after year. Chevy's ability to appeal to the average buyer without sacrificing quality has been a cornerstone of their success. They've created a lineup of vehicles that cater to families, commuters, and small business owners alike, each one offering value without compromising reliability. By focusing on these core needs, Chevy demonstrated a profound understanding of what drivers truly care about. This consumer-first mentality is why Chevy is resonating with buyers, proving that putting the customer first is a winning formula. As they move forward, Chevy's commitment to meeting real-world needs sets the stage for their continued leadership in the market, mastering luxury without the price tag. Unlike many competitors that target only the most affluent buyers, Chevy has found a way to offer high-end features and comfort at a price that doesn't alienate middle-income consumers. Vehicles like the Suburban and Silverado High Country are perfect examples. These models provide the space, technology, and premium finishes that buyers desire, without pushing costs into the unattainable range. Chevy's strategy hinges on balance. By incorporating advanced safety features, cutting-edge infotainment systems, and refined interiors, they make their premium offerings feel luxurious. At the same time, they maintain a pricing structure that makes these vehicles accessible to a wider audience. This approach not only broadens their customer base, but also challenges the notion that luxury must come with an exorbitant price. In doing so, Chevy positions itself as a serious contender in the premium market, earning respect from both consumers and industry analysts. This ability to deliver an upscale experience without the excessive price tag gives Chevy a distinct edge. They have tapped into a growing segment of buyers who want the look and feel of a luxury vehicle, but can't justify the costs associated with brands like Jeep or Lincoln. Chevy's approach ensures that their models don't just compete, they thrive, establishing a foothold in a market that many other automakers struggle to reach. As Chevy continues to refine its offerings, this strategy will be central to maintaining their competitive edge and delivering value that resonates deeply with consumers. Adapting to the electric future. Chevy isn't just adapting, they're anticipating the future of electric vehicles. While some automakers have gone all in on electrification at breakneck speed, Chevy has chosen a more measured path. This isn't hesitation, it's strategic foresight. Chevy knows that the automotive landscape is shifting, but they also understand that the transition to electric isn't as simple as flipping a switch. By balancing their existing lineup of fuel-efficient traditional vehicles, hybrids, and a growing selection of electric models, they ensure they can meet current demand while positioning themselves for the future. One of Chevy's strengths is its ability to stay ahead of the curve without overcommitting to unproven markets. They've invested in electric vehicles like the Silverado Electric and the Equinox Electric, but they've done so in a way that allows them to keep their internal combustion engine models strong. This dual approach ensures that Chevy remains relevant to today's buyers while building a solid foundation for tomorrow. It also allows them to mitigate risk. Should electric adoption slow or infrastructure challenges persist, Chevy will still have a robust portfolio of reliable, profitable vehicles to lean on. This forward-thinking strategy makes Chevy a long-term leader in the automotive industry. They are not only prepared for the eventual rise of electric vehicles, but also equipped to continue delivering high-quality options to drivers who may not yet be ready to make the switch. By taking a balanced approach, Chevy sets themselves apart as a brand that isn't just following trends, it's setting the pace. This calculated progression toward electrification is just one of the ways Chevy is proving that thoughtful adaptation beats impulsive innovation. The future of the automotive landscape. What's next for the car industry, and how will Chevy stay on top? As the automotive market becomes more polarized, Chevy's ability to remain agile will be key. The rise of electric vehicles, the growing importance of sustainability, and the constant push for innovation are creating challenges that few brands can handle. But Chevy has shown time and again that it can navigate these shifts while maintaining its core strengths. Chevy's strategic foresight positions them to remain a dominant force in the automotive world. They've demonstrated that profitability and sustainability can go hand in hand. By prioritizing efficiency, investing in hybrid technologies, and carefully expanding their electric offerings, Chevy is proving that there's no need to sacrifice quality for the sake of trends. At the same time, they continue to focus on affordability, ensuring that their vehicles remain accessible to the majority of drivers. This unique blend of practicality and forward-thinking innovation sets Chevy apart in an industry that often leans too heavily on one side or the other. As the market evolves, Chevy's ability ability to adapt will be critical. Whether it's introducing new technologies, rethinking traditional production methods, or finding ways to lower costs without cutting corners, Chevy's track record suggests they'll stay ahead of the curve. Their strategic balance of affordability, sustainability, and innovation ensures that they won't just keep up, they'll continue to lead. The automotive landscape is changing, and Chevy is poised to shape its future, cementing their place as a trusted name for generations to come. What Chevy's strategy means for you right now. Chevrolet's newest approach is already shaking up dealerships, and it could save you money today. Chevrolet has taken a consumer-first approach, making its pricing strategy and inventory management a model of accessibility. Buyers are finding more affordable options, even as the cost of living continues to rise. For example, vehicles like the Trailblazer and the Trax are priced within reach of many drivers, showing how Chevrolet's commitment to affordability is yielding real savings. These aren't just budget models, they're practical, reliable vehicles that deliver quality and value. Dealerships are also seeing a shift. Fewer markups and a better balance of stock mean that shoppers have more choices without breaking the bank. For buyers who once struggled with inflated prices and limited selection, Chevrolet's fresh strategy is a game changer. These immediate, tangible benefits reflect a broader shift that's already reshaping the experience of buying a car today. By focusing on affordability and reliable inventory, Chevrolet is helping consumers feel confident in their purchase decisions. This approach not only puts more drivers in new vehicles, but it also fosters trust between the brand and its buyers. Chevrolet is proving that a strong commitment to consumer needs can lead to market success and happier customers. But here's where it gets even more intriguing. Chevrolet's moves aren't just changing your options, they're sending shockwaves throughout the entire industry. The domino effect, how the entire industry is responding. Notice how more automakers are suddenly offering discounts or scaling back luxury lines. That's no accident. It's all part of the Chevrolet ripple effect. As Chevrolet's success becomes impossible to ignore, competitors are being forced to rethink their strategies. Ford, Stellantis, and other industry players are adjusting their production forecasts and cutting back on high-end models that consumers have grown less willing to pay for. Instead, they're beginning to focus on affordability and practicality, areas where Chevrolet has clearly taken the lead. These changes aren't just happening at the factory level. Dealership networks are also evolving. Many dealers, once burdened with unsellable luxury inventory, are now rebalancing their offerings to align with Chevrolet's more consumer-friendly approach. This shift is also influencing technology and investment decisions. Some automakers are pulling back on overambitious EV plans, reallocating resources to gas-powered and hybrid vehicles that remain highly profitable and desirable. Meanwhile, the ripple effects extend beyond pricing. Competitors are now exploring how they can make their vehicles more appealing through enhanced features and streamlined production processes. Some brands are introducing mid-tier trims that aim to blend practicality with comfort, mirroring Chevy's strategy. By doing so, they hope to capture a larger share of the market that Chevy has successfully tapped into. As more brands scramble to keep pace, car buyers stand to benefit. Broader price cuts, improved financing deals, and a renewed focus on practical innovation mean a better experience for everyone in the market for a new car. So if this is what's happening now, how will these changes shape the future of car buying, especially for you? The new standard, future implications for buyers. What if tomorrow's vehicles offered better value without compromising on style or features? Chevrolet is setting a new standard and redefining the idea of value for the next decade. This shift is pushing the auto industry toward a new design philosophy, blending affordability with technology and comfort instead of focusing solely on luxury pricing. Consumers are increasingly drawn to luxury light features, advanced safety systems, enhanced infotainment options, and improved convenience at prices that feel within reach. As competition intensifies, financial incentives are evolving too. To attract budget-conscious buyers, automakers may offer more favorable interest rates, extended warranties, and flexible lease terms. These consumer-focused strategies, inspired by Chevrolet's lead, make vehicles more accessible and appealing to a wider audience. Chevrolet's approach is also reshaping how automakers view vehicle segments. Many brands are now considering expanding into overlooked categories like smaller SUVs and versatile crossovers, aiming to replicate Chevrolet's success in offering practical, high-value options. By meeting diverse consumer needs without driving up costs, Chevrolet has set a precedent for the industry. If Chevrolet continues balancing affordability with quality, it could shift how we think about premium vehicles entirely, and consumers stand to benefit. However, the question remains, how will Chevrolet maintain this edge in the next 5 or 10 years, and can rivals catch up? Looking ahead, Chevrolet is poised to shape the future of the auto industry, with plans to expand its lineup of electric vehicles while maintaining strong gas and hybrid offerings. Chevrolet's diversity ensures flexibility in an unpredictable market. Globally, they are ready to compete in emerging markets, focusing on affordable, sustainable solutions. Innovation is at the core of Chevrolet's strategy. Investments in advanced battery technology, improved hybrid systems, and alternative fuels ensure they meet sustainability demands while remaining profitable. Chevrolet's careful planning sets a standard that rivals will struggle to match. By staying committed to both innovation and affordability, Chevrolet could very well shape tomorrow's car industry, one practical, driver-friendly move at a time. And that begs the question, with Chevrolet forging this path, will other automakers join the race toward truly affordable innovation or risk being left behind? Let us know your thoughts in the comment below.